Welcome, everyone, to a journey through the high-stakes world of Forex trading, where fortunes can be made or lost with the push of a button. Today, we're diving into some of the most jaw-dropping trades in history, with a spotlight on a legend among legends, Andy Krieger. This man didn't just play the market, he went head-to-head with entire countries' currencies and won. Ever heard of someone betting big against a country's dollar and actually causing waves in its economy? That's just a sneak peek of what we're unpacking. Stick around as we unravel the tale of Andy Krieger's audacious trade that etched his name into Forex history. Are you ready to see how giants trade? Let's dive in. The legends of currency trading. Let's dive straight into a world where a single decision can move billions. This is the realm of Andy Krieger, a trader who stepped into the Forex market and quickly became a legend. Imagine Krieger, focused and fast, making moves that others wouldn't dare. Before him, there were giants like George Soros, who famously took on the Bank of England, and Paul Tudor Jones, who saw the 1987 crash coming. These traders were already legends, but Krieger managed to stand out. He did something extraordinary. He bet against the currency of an entire country and won. We're shining the spotlight on Krieger today. His story isn't just about a successful trade, it's about opening our eyes to the power of Forex trading. Andy Krieger not only made a fortune, but also changed how we see the market's potential and the courage it takes to trade. Andy Krieger's entry into the Forex trading world wasn't just another career move, it was a pivotal moment that would later define him as one of the most strategic and audacious traders in history. Unlike many who tread cautiously, Krieger embraced risk with unmatched confidence and intellect, marking his territory in a domain dominated by heavyweights like George Soros and Paul Tudor Jones. These titans reshaped markets with their bold moves, but Krieger's approach was distinct. His analytical prowess and daring bets set him apart. Krieger's legend was cemented when he audaciously bet against the New Zealand dollar, a move that not only showcased his keen market insight, but also his ability to capitalize on currency vulnerabilities. This wasn't a gamble, but a calculated strategy grounded in meticulous analysis and an understanding of geopolitical influences on currency values. What makes Krieger's story invaluable isn't just the profit, but the demonstration of leveraging in-depth market analysis, the importance of timing, and the courage to act decisively. Understanding Forex trading? Diving straight into the heart of Forex trading, let's unpack some core concepts that every trader, novice or experienced, grapples with. Currency pairs, leverage, and the art of short selling. Imagine you're eyeing the EUR-USD pair, which stands for the euro against the US dollar. If you predict the euro will gain strength against the dollar, you buy this pair. If you foresee a drop, you sell. It's like betting on the stronger athlete in a race, but here countries' currencies take the track. Leverage is your best friend and your biggest challenge in Forex trading. Picture this. With just $100 of your own money and a leverage of 100, you can control a $10,000 position in the market. It's like controlling a giant with the strength of a mouse. This can amplify your profits significantly, but remember, it can also magnify your losses. Imagine you're on a seesaw. Leverage is like adding weight on your side. It can launch you into the sky if the market moves in your favor, or it can slam you down hard if it doesn't. Now let's talk short selling, a concept many find backwards at first. You're essentially selling a currency pair you don't own, hoping to buy it back cheaper later. Think of it as borrowing a friend's high-end bike to sell at today's price, betting the price will drop tomorrow so you can buy it back cheaper, return it, and keep the difference. The Forex market is swayed by a trio of titans: economic indicators, political stability, and the trader's psychology. For instance, when the US announces higher employment rates, the USD might strengthen. If a country is in political turmoil, its currency might weaken. And never underestimate the herd mentality. Where the crowd goes, the market often follows. Each trader's decision, driven by news, rumors, or gut feelings, contributes to the market's movement. In Forex trading, staying informed and understanding the psyche behind market shifts can be as crucial as the trades themselves. The prelude to Krieger's big trade. In the heart of 1987, the financial world was riding on what seemed like an unstoppable wave of prosperity. Stock markets were booming, and investors felt invincible. But Andy Krieger, a keen-eyed trader with a knack for spotting opportunities where others saw none, observed something amiss. It was a time when numbers on screens started behaving like warning signals, flashing the potential for a seismic shift in the Forex landscape. October 19, 1987, now known as Black Monday, saw the stock market crash in a way it hadn't since the Great Depression. The Dow Jones Industrial Average plummeted by 22.6%, wiping out billions in value overnight. While panic ensued and traders scrambled, Krieger calmly sifted through the chaos for currency vulnerabilities, believing that the ripple effects of the crash were far from over and would inevitably spill over into the currency markets. Krieger's analysis hinged on practical and numerical insights. He meticulously examined currency values, trade balances, and interest rates, identifying the New Zealand dollar, also known as the Kiwi, as peculiarly overvalued. The numbers didn't lie. The Kiwi's strength was disproportionate to New Zealand's economic fundamentals. Its trade balance, for instance, was not strong enough to justify its high value, and Krieger sensed an artificial inflation driven more by speculative trading than by economic health. With the precision of a surgeon, Krieger planned his move. He knew that the Kiwi was ripe for a correction, but what set him apart was his foresight to leverage this opportunity on a grand scale. Utilizing options and leverage, he positioned himself to not just profit from a market adjustment, but to make financial history. Krieger's strategy was not just about making a quick profit. It was a calculated move based on deep analysis and a bold bet against the market consensus. His readiness to act against the grain, armed with numerical analysis and a clear-eyed view of the global financial climate, set the stage for what would become one of the most legendary trades in Forex history. Andy Krieger versus the Kiwi. On a day like any other in 1987, Andy Krieger, a trader who wasn't afraid to make bold moves, decided to take on the New Zealand dollar, also known as the Kiwi. What made this move jaw-dropping was the sheer scale of it. Krieger used leverage, a way to amplify your trading power using borrowed money, to place a bet that was bigger than the entire money supply of New Zealand. Imagine just one guy going up against an entire country's currency with a bet so large, it surpassed the amount of cash floating around in that country. Krieger had noticed that the Kiwi was incredibly overvalued. The world markets were still reeling from the 1987 crash, and in the chaos, Krieger spotted his opportunity. By using leverage, he managed to control a position worth hundreds of millions of dollars with a significantly smaller amount of actual cash. The numbers were staggering. With a keen eye and a steady hand, he shorted the Kiwi, betting it would fall. And fall it did. When Krieger's predictions came true, the impact on New Zealand was profound. The value of their currency plummeted. For a country of its size, having someone bet more than their entire currency supply was a shock to the system. It put the Kiwi on a downward spiral, affecting everything from inflation rates to the everyday purchasing power of New Zealanders. Strategy finally revealed. In 1987, Andy Krieger eyed the New Zealand dollar, sensing it was overvalued. Diving into his strategy, he didn't just go by gut feeling. He backed it up with solid analysis. Krieger observed market trends, economic indicators, and political climates meticulously. His decision to short the Kiwi wasn't a wild guess, but a calculated move. Leverage played a pivotal role here. Krieger used a leverage ratio unheard of at the time, essentially betting more money than was in circulation in New Zealand. This wasn't reckless gambling, it was strategic. By leveraging his position, Krieger magnified his potential gains. But with great power comes great responsibility. He managed this high-stakes trade by setting clear risk limits and having a precise exit strategy. From Krieger's playbook, traders learn the value of thorough market analysis and the courage to act on their convictions. Leverage can indeed amplify gains, but it's a double-edged sword that requires strict risk management. The ripple effect. Right after Krieger's big move in 1987, the whole Forex world was buzzing. Imagine one guy making a bet so huge it outdid the cash supply of a whole country. This wasn't just chat over coffee, it sparked big changes. Banks and trading houses started to rethink how much one person could bet, leading to tighter rules on trading sizes and leverage. And Krieger? He didn't stick around to bask in the glory. Instead, he chose to step back, focusing on quieter, though still impactful ways to shape trading. By sharing his knowledge through writing and private mentoring, he continued to influence the trading strategies of many, emphasizing risk management and the psychological aspects of trading. His legacy isn't just in the trade itself, but in the more cautious, calculated approach to Forex trading that followed. So what can we, as modern traders, learn from Krieger? First, risk management isn't just a buzzword. It's your trading lifeline. Krieger knew his limits and played within them, leveraging big but wisely. Then there's market analysis. Krieger didn't just look at the charts. He looked at the world, spotting opportunities where no one else did. And let's not forget the psychological game. Trading tests your guts, patience, and resilience. Krieger had them in spades. Let's take these lessons to heart. Whether you're trading $100 or $100,000, the principles remain the same. Manage your risks, analyze deeply, and stay mentally tough. Krieger's story isn't just history, it's a roadmap for us all. Let's use it to navigate our way to trading success.